I don't think you should spend property. I think that this is a fundamental misconception people have. They keep thinking they have to spend it, or it has to have a use or utility for it to have value. The reason they think that is because they've never been rich. Like, I mean, it's really non-rich people that think that. For example, if my family had bought up 20 blocks of Manhattan 200 years ago, would I have to spend my real estate on coffee does Manhattan have to have value? Like, isn't it obvious that owning all of Manhattan and not giving away any of it for 200 years is probably a better investment, a better idea, right? It's property. Like, how about Robert Kraft? He owns, the New England Patriots. Does he spend 1% of the New England Patriots to buy coffee? Does he give it away every year so it'll have value? No, he owns it. Is he giving? What's he going to do with it? Give it to his kids if he can, right? It's a dynastic thing. The United States doesn't give away its land to foreign countries to buy coffee, right? So if you have real wealth, if you have a franchise, if you own Manhattan, if you actually own, like, Jeff Bezos didn't get rich by spending Amazon stock on coffee. Jeff Bezos got rich by not spending Amazon stock. Larry Ellison still owns Oracle. How did he do it? He borrowed against it, right? Rich families, rich countries, they borrow or they generate yield on it, right? If I own Manhattan, I can either borrow against it or I can let you build a building on it, but I keep ownership of the underlying property. A lot of the property in Europe, the noble families like the Prince of Wales, whatever, they own the land underneath London. And then people that have buildings, they don't own their land. They have a 100-year lease or a ground lease or a 200-year lease or a 50-year lease, but they don't actually own the property, right? Sometimes the government owns the property. In UAE, it's illegal for a foreigner to buy land on the beach. I think all of the prime beachfront property, it's impossible for a foreigner to buy it. It's against the law. So if you think, once you understand property, you understand that if I gave you $1 billion of property, you could pretty much just stay rich forever and you don't have to spend the property. All you got to do, borrow money at 2% interest against the property, invest it in the S&P that yields 10%, scrape the 8% yield, never sell the stock, never sell the land. Just you're living off of rent or arbitrage off the energy. And that's, I think VJ understands that. What VJ would say is the reason that Bitcoin is good money is because there is no utility value for it other than as money. Like if gold is not a good thing to monetize because it has value as jewelry, and corn is not a good thing to monetize because it has value as food, and a house is not a good idea to monetize it because it has value to live in. You want to monetize something which is 100% monetary premium, and to be a 100% monetary premium, you don't have to spend it. I think the big idea that people just don't get is they don't understand that under inflation, money decomposes into a currency and an asset. So in a non-inflationary environment, this is first principles reasoning. If the US dollar was never printed, if the US dollar was not inflationary, then it would be a store of value and it would be a medium of exchange and it would be a unit of account. But when I decide to print 10% more dollars every year, it becomes a medium of exchange, a unit of account, but the store of value disappears and it drifts. And the store of value becomes sovereign debt or gold or S&P 500 stocks or equity or Bitcoin, something. So when the dollar inflates 20% a year, it's pretty clear the currency is no longer a store of value. When the currency inflates at 80% a year, it's not, it's losing its value within 6 months, and so it starts to just totally break down. If you understood that, once you get that idea, you realize that for Bitcoin to have value, you don't have to spend it, you have to hold it. And the way that you execute your life is you fund your checking account, or you fund your working capital by borrowing or generating yield off of your asset. So I have $1 million of Bitcoin. I borrow $10,000 against it. I don't sell the Bitcoin. I pay 3% interest. Bitcoin goes up 10 or 20% a year. I keep funding a USD checking account against my BTC savings account. And then the asset will go up faster than my rate of expenditures. For that to work, all I need is a bank that will either generate yield for me or it will give me low interest loans. So you need Bitcoin Bank. Every rich person in the world, every wealthy person, they have billions of dollars or hundreds of millions of assets. They have banks, and the banks are going to give them financing at LIBOR plus 50 basis points against their equity portfolios, or LIBOR plus 200 basis points against their yacht, or LIBOR plus 100 basis points against this, or they're financing their business at the junk bond. Every business can borrow money at 4% interest in the junk bond market. Right. And so, or they're going to banks, they're saying, I have $1 billion building, and they're refinancing it with a building construction loan at 3% or 4% interest. So they're all continually financing their assets with a mixture of debt instruments in order to avoid capital gains, in order to avoid income tax, and in order to avoid shrinking their asset portfolio. Because if I have $10 billion of real estate, and if you can predict that the Fed is going to print 7% more money a year, and if the real estate's in New York and it's scarce, can't you reasonably assume that the real estate's going to go up by 7% a year?
Of course.
And doesn't that mean that your $10 billion of real estate is going to be worth an extra $700 million next year? And doesn't that mean that you can refinance it and you can take $100 million a year out of that at 2% or 3 or 4% interest, tax-free forever?
Yes. What about for a poor person who has $100 in Bitcoin and can't find somebody to lend against it?
It's the principle is the same at all scale, which is you want to divide your assets into a savings account that's in an appreciating asset, BTC, and a checking account that's in a depreciating currency.